We've got Mr. Hemant Jalan, the Chairman Managing Director, now joining in to discuss the quarterly performance and lots more. Thank you so much for taking time out and joining in. It has been a healthy quarter for the company in the fourth quarter. Can you just walk us through the outlook in terms of whether it was the decorative or the industrial segment that drove your revenue growth, and what is likely to drive growth down the line?
Thanks, Aisha, for having me on the show. And as far as the last quarter is concerned, it's been a good quarter as far as bottom line is concerned. I think as far as the top line is concerned, it's not as great as what we would have wanted it to be. As far as going forward is concerned, we are not very much into the industrial segment. We're almost purely into the decorative segment. We have recently acquired a 51% stake in an industrial product company that manufactures waterproofing products and construction chemicals, but that would be a fairly small percentage of what Indigo Paints size is. So therefore, going forward, the growth has to be led completely by the decorative segment. And April and May have been rather good months. The outlook is looking very bright for us. And we hope to come back with much stronger top-line growth numbers in Q1.
So yes, that is the acquisition that you were talking about, the construction chemical firm. But what about your margin outlook as well? Because your EBITDA margin has been the highest in the last 2 years at about 22%. That has been better than your peers as well. Is this margin okay? I'm just going to apologize. I'm going to come in there to you in a moment, Mr. Jalan, but take a look at the visuals on your screen because it's yet another feather in the cap for India's space program. What you're seeing is ISRO's launch of the navigation satellite GSLV NVS-1. That's the second generation navigation satellite. It's a significant launch, and that's going to ensure continuity of NAVIC, which is an Indian regional satellite navigation system that will help improve monitoring and navigation capabilities. Also, for the first time, NVS-1 will be carrying an indigenous atomic clock.
Sharvan Minato. Shatu is in Minato.
वर्तमान में प्रथम चरण
All right, there you have it. Those are the visuals, the launch of the navigation satellite by ISRO. Moving right back to our conversation with the management of Indigo Paints and Mr. Jalan, we were talking about your margins. Do you think it's sustainable at 22%, and what will be your margin levers?
No, I don't think that it is sustainable at 22% for every quarter. Our behavior in terms of margins is rather different quarter on quarter. Fourth quarter is when our profitability and sales traditionally peak, and therefore the top line sales numbers for the fourth quarter have been the healthiest in the last 4 quarters. And also, as far as the margin is concerned, the EBITDA margins are always the highest in the fourth quarter. So I do not expect 22% EBITDA margin going forward in Q1, given that 1 month of Q1, that is June, is going to be the monsoon period. So normally, monsoon is not the greatest time in terms of product mix and sales for paint companies. However, you will note that our gross margins have consistently been the highest in the paint industry, even outstripping the industry leader by a fairly wide margin. So we do expect to retain very healthy EBITDA margins going forward. As far as the full year is concerned, I'm pretty sure the EBITDA margins would be a little better than what they were in the last year. But on a quarterly basis, I would hesitate in giving a specific number guidance.
Tell us about volume and pricing for the full year.
Pardon?
No, I just wanted to know what kind of pricing outlook you may have for the financial year ahead and what kind of volumes you're hoping to clock.
So as far as prices of paints are concerned, at the moment, they appear to be very steady, and they have been steady for quite a while now. Raw material prices have also been extremely steady for the last 6-7 months. So I don't foresee any movement in the pricing of our paint products, either in an upward or a downward direction in the foreseeable future. So as far as that is concerned, I don't expect any significant change. And when there is no significant change in the pricing, then volume growth numbers and value growth numbers tend to converge together. So we do expect healthy volume growths and value growths to continue. The industry has been kind of averaging somewhere between 9 to 12, 13% in the last couple of quarters. I think that Indigo Paints is poised to do much better than that. I will not again come back with a specific number, but I think from Q1 onwards, we ought to outstrip the industry growth rates, both in volumes and in value.
But how's competition panning out? I mean, you've got Grasim, Pidilite, JK Cement, all of them now foraying into the paint segment. Just wanted to understand what kind of market share are you targeting, and would you then have to step into pricing and discounts perhaps to try and protect your market share, or eat into the pie already?
See, Grasim is still a full 4 quarters away as far as launch is concerned. So that is not of immediate worry. As far as Pidilite is concerned, from their own press releases and what we see on the ground, they have done some kind of a test launch in only 3 states in India. And at the moment, they do not plan to go pan-India, is what we hear from their management. Even in those 3 states, at the moment, we have not noticed any significant movement on the ground. And the same can be said of JK Cement. They have acquired a fairly modest sized paint company and have not done anything that we are aware of in terms of expanding capacity. And therefore, we do not expect any kind of a shake-up happening in the next 4 quarters as far as any aggression by a competitor is concerned. Now, as and when Grasim does come up, I cannot predict as to how much sales Grasim will be able to garner, and that is really not of much concern to us. What is of concern is whether whatever market share they garner, is it going to be sufficient to change the profit dynamics of the paint industry? And there, my feeling is a resounding no. And therefore, we are not really worried about any price cutting or any margin erosion once a larger player comes in. In any case, our gross margins are the healthiest. And secondly, price cutting to sell paints is a big no-no in my opinion, and is not likely to yield results should that be the strategy of a newcomer.
Thank you for being so candid, Mr. Jalan, and joining in today with your thoughts.